don't hold your breath. I think they're going to sacrifice our currency before they allow house prices to crash. And they have been sacrificing our currency, because you can do this ratio versus the dollar as well. If you go back to 2007, the pound reached a high of $2.11, and now we're around 125. It's not just against gold. Monday, April 29th, 2024, Maneco 64, home of alternative economics and contrarian views. A lot going on out there, of course, but today we're going to look at UK house prices. It's a favorite topic in the UK, house prices, mainly because the housing sector is so important for the health of the economy, the health of the financial system. And there are many out there who think house prices are about to crash. But I beg to differ. And why? Well, because I think the authorities, and by the authorities I mean the Bank of England and His Majesty's Treasury, be it under a Conservative or Labour government, are going to do their darndest to not allow that to happen, at least in nominal terms. And what do I mean by nominal terms? Well, they're going to sacrifice, and they have been sacrificing our currency for the last 10 years in order to keep the housing market and house prices from collapsing. And I'm going to show you how they're doing that. Before I do, I'd just like to thank all of you again for your interest in the channel. We're fast approaching 100,000. I think we only need about 500 or 400 new subscribers. So it could happen this week, or it could happen next week, or it might happen in a year's time. I thought about 18 months ago that it would have happened in May of last year. So you never know. I'm just going to keep plugging away and trying to give you good content. Before we look into the UK house prices, just wanted to talk a little bit about the Japanese yen. I've been covering it here. Japanese yen today dropped to a 34-year low. So the dollar rose to 160. Of course, it helps the carry trade, because in the carry trade, you borrow in yen and you put the proceeds of the FX transaction. So you sell the yen, you borrow in yen, you take the pound or the dollars and you buy higher yielding assets. But the problem with that is that the yen has been dropping so quickly that it could create a lot of volatility. And despite the fact that today is a national holiday in Japan, we've seen a lot of volatility in the yen. So the dollar went up to 160, or the yen dropped, and then it just flipped around to 155, and now it's the dollar's risen back again. There is speculation that the Bank of Japan will intervene. Of course, they left rates at 0 last Friday. Intervention is going to be not the solution. The solution, of course, is for the Bank of Japan to raise rates to at least 1%, but they'll never do that. The solution is for them to end the QE, but they'll never do that. So I'm afraid the yen is putting the whole world's financial system in peril. But if the Bank of Japan did the right thing and raised rates and stopped QE, that would put the world's financial system in peril. There are some who think that the other central banks like the Fed, ECB, and BOE should help the Bank of Japan by cutting, so to put less pressure on the yen. I don't think that's the solution either. But you never know. Central bankers are really crazy, and that's why we're going to now go over to England and look at the Bank of England, house prices, and gold. Yes, we're going to look at something I've done before in the past. For those of you who have been following me for years, we've looked at the nationwide house price average UK house price to gold ratio, which is basically how many ounces, troy ounces of gold you need to buy the average UK house price. And you could do the same thing for the London price, but I'm going to do it as the national UK. I've got data here going back to 1952 from the Nationwide Building Society. And just to give you an idea, the lowest ratio has been around 90.87, and that was back in 1982. So you just needed just over 90 ounces of gold to get the average house price. The highest was in 2004, and you needed 672 ounces of gold to buy the average UK house price, as you can see here by this chart that I've designed. And ever since 2004, that ratio has been dropping as there's been some corrections. But as of now, we are around 138, or to be exact, as of Friday's closing price for gold, which was around 1871, and I used the latest, I think this was for March, the nationwide average house price was just under 264,000. Yes, this is going to change, but as you can see by the chart, this ratio is at the lowest level it's been in about 40 years. So UK house prices in real terms. And why do I say real terms? Well, because gold is money. Everything else is credit. Gold has been not just a means of payment, a means of accounting for value, but also a store of value for thousands of years. You need to understand that our currency, the so-called pound sterling, is nothing but an empty promise. It's a fiat currency, and they always go to zero. There's no exception in the history of finance or in the history of currencies. Fiat currencies always go to zero, and that's why I think the Bank of England, the government, as per the Treasury, they're going to do all they can. And by that I mean more money printing, keeping interest rates artificially low, more help to buy schemes, other schemes to encourage people to keep buying their homes, help with people's mortgages. That's going to continue. It's probably going to get even bigger, this help, if Labor happens to win the next election. All that will do is dilute the value of your fiat pound. And that's why I say that I would argue that in real terms, UK house prices have been crashing since 2004, when that ratio reached 672, and now we're, fast approaching, let's say 130. We're 138. So how would that ratio work, and where do I think that ratio is going to go? And does that mean if you're looking to buy a house that you need to buy gold and hold on to it? No, I'm not telling you to do that. All I'm saying is that they can keep this going for a long time. The people who are going to get hurt, of course, are the average people, the people, young people, or even, people in their 30s and 40s who haven't been able to get on the housing ladder. They're going to continue to get hurt. And why? Well, because they're getting paid in a currency that's losing value at a rate of knots. And, of course, a house is a real thing. Bricks and mortars. It's hard to build a house. It costs. It's a real thing. I'm not going to touch upon also the immigration side, but that doesn't help either. Flooding the country with hundreds of thousands of immigrants every year. That doesn't help. But I would say that the one of the major reasons why we're seeing this happen, and what I mean by this, well, the unaffordability of houses for the average person is that the authorities have been keeping, they're desperate to keep house prices high because the banking sector, a lot of their assets, a great deal of their assets are related to mortgages. So you let the housing market collapse, the whole economy will collapse. Tax receipts will collapse. The other thing that they want to keep coming is inheritance tax. A lot of, especially in the Southeast, a lot of people's houses are way above the threshold of 325,000 pounds. So the higher house prices stay, the more tax receipts in terms of inheritance they get. And it's the last thing they're going to allow is a collapse in the nominal price of houses. So this is just my opinion. I'm not telling you anything here in terms of what to do. I'm just saying that if you think house prices in fiat pounds are going to collapse and you're waiting, you might want to think again. What's the solution here? Well, I don't know. The solution here, I would say, would be for the authorities, and by that I mean the BOE and the government, to wake up and smell the flowers, and realize they can't keep doing this forever. In an ideal world where government and the central bank hadn't interfered as much as they have since the 08-09 crisis, this wouldn't be happening. The economy would have probably recovered by now. They wouldn't have saved the banks. They wouldn't have saved house prices back then. Things would be very different, but I'm sure houses would be a lot more affordable by now. So what's the best way to keep track of this ratio? Well, go to the nationwide nationwide website. You can find the data there going back to 1952. And for gold, I recommend the LBMA website, lbma.org, and you can find the gold price in pounds going back to 1968. And from 1968 to 1952, the gold price was fixed at £12.50 per troy ounce. Yes, 12 pounds, and now we're like at 1,800. Just to give you an idea, the average house price in 1952 was just below 1,900 pounds, and the price of gold was £12.50, so the ratio is 151. So it's all to do with value, and in the currency of kings, or the money of kings, i.e. gold, house prices have been crashing. Yes, they have. And I'm not sure if they're going to crash in the currency that we use, the fiat currency. Yeah, they could drop a little bit, but don't hold your breath. I think they're going to sacrifice our currency before they allow house prices to crash. And they have been sacrificing our currency, because you can do this ratio versus the dollar as well. If you go back to 2007, the pound reached a high of $2.11, and now we're around 125. It's not just against gold, but gold is the ultimate measure. So let's get back to the markets now and see where we are this morning. It's just before 8 a.m. London time. Spot gold is down about $9 at 23.28. High's been 41 and the low's been 19. Silver's pretty much unchanged. trading around 27.20. High's been 34 and the low has been 26.92. The Dow futures up 94. The NASDAQ 100 is up 56. S&P is up 12. The FTSE, yes, that is near record highs of 8,186. It's up 0.5%. With the FTSE as well, if you do the FTSE gold ratio, you will see that we've come from around 38 or 40 in 1999. So you needed around 40 ounces of gold to buy a FTSE, and now it's under 5. So that's just another mirage, really, of value. So the FTSE has really also crashed versus gold over the last 24, 25 years. What about the currencies? Well, we spoke about the yen. Yes, well, we reached a high. The dollar reached a high versus the yen of 160.29. Yeah, the market is volatile because it's a holiday in Japan. It did, though, reverse all the way to 155. Now we're at 157. So why did it do that? Well, the FX market is frenetic and it's thin because of the holiday in Japan. And people, they got to that 160 level and they thought, wow, maybe tomorrow the Bank of Japan will come in and intervene. But that's all that's happening there. In terms of the other currencies, the pound is up 0.25% and the euro. So yeah, the dollar is taking a little bit of a hit today. So why is gold down? Well, the FX market can do anything in the short term. In the long term, of course, we know that all fiat currencies are going to sink versus gold and silver. What about the commodities here? WTI crude is down just under 1% at 82.89. Brent is down about 1% at 87.40. High grade copper is up 0.5%, just below 460. And to finish off, we'll quickly look here at the U.S. Treasury market. The 10-year yield is down about 3 basis points at 464. The 2-year yield is down 1.5, just below 5%. So with that, I'm going to wish you all a very good day. Take care. Bye.